Muyiwa, great to have you on the show. First things first, let's take a look at your... Hi, Muyiwa. Now, let's take a look at your performance on the banking... Your take on the performance of the banking sector this year. Suddenly, we're seeing the sector is up 40% year to date. So give us a picture. What's your take on its performance?
Has been quite impressive, like you highlighted, up 40% year till date. I think it's really a reflection of the very attractive valuations we saw through the year. In terms of valuations, the banking sector is still trading at a discount compared to sub-Saharan African peers. It's currently, on the price-to-book basis, currently about 0.8 times. That's our coverage average, while the sub-Saharan African peers is currently trading at about 1.6 times. So it's still quite attractive, despite the fact that we've seen a strong rally in the sector. And I think also, but I think also it's also important to put into context the ROEs of these sub-Saharan African banks as well. For the banks we track, they're at an average of about 18% compared to our coverage where we expect to settle at about 15%. But I'd say also the strong half-year performance of the banks have also boosted the stock price performance, right, that we've seen year till date, even though, like you highlighted, we've seen a slowdown. And so I would say the performance this week has been quite slow compared to what we've seen in previous weeks.
That's right, Muyiwa. Certainly performance was slow this week, but like you're saying, through the course of the year, we're seeing that sector still an attractive sector to invest in. But Muyiwa, give me your take on which names are still good investments for you.
I would say, in terms of the names we like, we still like First Bank. We like GT more because of the quality of earnings which we expect to see this year, and I would say also in 2013 as well. So despite the fact that it's trading quite, shall I say, the valuations look quite demanding if you compare it to its peers, but the ROEs have actually been quite impressive as well. Because if you look at H1 performance, ROE was at about 35% compared to our coverage average that had an ROE of 18%. So I would say the price to book of 2 times relative to our coverage average of 0.8 times is really quite, shall I say, the bank deserves that valuation right now, and so would still be comfortable with GT Bank. And we also feel Diamond Bank also still offers some, shall I say, stronger upsides based on where it's trading right now. It's trading at price to book of 0.34 times, and that's still a discount to our coverage average. So, but I'll think it's also important to highlight that the stock performance year till date has been quite impressive as well. It's up about 70% year till date, but we think it still does have a good upside potential to go. If you look at its half-year performance, it's been quite impressive, and it's ahead of our full-year forecast. ROEs for half-year is at about 23%, while we are forecasting full-year ROEs of about 14.5%. So it's still quite ahead of our full-year estimates right now. And so we think the stock is obviously a good stock to still be in. However, we would highlight that the catalyst would be more of the full-year performance. So if we see strong numbers by full-year 2012, and we think that would support prices and boost stock price performance.
Now, Muyiwa, that's First Bank, Diamond Bank, GT Bank. Certainly First Bank, GT Bank, top-tier banks. What about Zenith? You don't seem to feel like that stock is a good one, and I think Zenith has performed quite well. Certainly not today. We saw it was one of the big losers today, down 29 kobo. But certainly that bank still has a lot of attractiveness.
We've valued, should I say, we've valued the tier 1 banks apart from UBA through the year, and we think that the quality of their earnings have so far supported their price performance. So year till date, we've seen very strong performance in these banks, and we think that in terms of ROEs, we would also expect that they would outperform the tier 2. So even though I would say Zenith is not necessarily our most preferred pick in the sector, but we still think it's a very good name to be in at this time because of the quality of earnings we would expect relative to the tier 2 banks.
Okay, well, Muyiwa, let's talk about the laggards that are performing well now. I mean, Skybank specifically, we've seen that stock, I mean, hasn't performed well, certainly in the past couple of months. You say year to date it was down actually 18%. Now, we saw some positive half-year numbers in that stock. Also looking at its performance so far this week, it was slightly up. So, I mean, what is your take on some of these laggards?
I would say right now it appears as if the laggards are trying to catch on, even though if you look at Skybank's performance today, it was, I think, down compared to yesterday. So it appears as if momentum is already drying up on Skybank. But in terms of year-to-date performance, like you highlighted, it's been quite weak, even though I would say half-year performance has been quite, shall I say, impressive. We've seen an improvement in ROEs from Q1 to H1, and we've also seen overall efficiencies improve for Skybank as well, because Q1 was quite disappointing relative to our estimates, but half-year numbers was quite strong. Loan growth was up 18%, ROEs up about 13%, and I would say slightly ahead of our full-year estimates of 12%. So in terms of performance so far relative to our estimates, it's, I would say, tracking slightly ahead of our full-year estimate. So in terms of, I would expect that there would be some re-rating at some point, but I would say it appears as if the stock has, should I say, the market hasn't really responded so far strongly to its half-year numbers. But I'll say it's also important to highlight that in terms of, if you compare it to the likes of Diamond Bank, that's comparing half-year ROEs, it's still lagging to that of Diamond Bank, even though it's ahead of FCMB's ROEs. FCMB's ROEs based on half-year numbers was about 10.5%, while that of Skybank was about 13%, like I highlighted earlier, while Diamond is still quite ahead of that at 23%.
Okay, well, thank you so much, Muyiwa. Certainly, we'll continue to watch the performance of some of these laggards. Thank you for giving us your take on the sector. Muyiwa Oni, he's an analyst with Stanbic IBTC.